Okay, what is going on, Megawhale team? Welcome back to the channel, guys. Thanks for tuning in to today's video. We're going to be taking a look at Bitcoin today and doing a little update on what is happening with the price action, focusing a little bit more on the short term today, since we've done a lot for the macro already, and we've already kind of talked about our macro, but we'll quickly wrap it all up, discuss it real quickly, and then go into our short-term analysis. Before we get into it, guys, head down to the pinned comment down below, click the link to get access to our Telegram channel and get access to all of our updates, analysis, and a whole range of more information. We also do have our VIP group chat and our VIP Telegram channel. We do daily updates, trade signals, market analysis, and a whole range of exclusive stuff. If you're interested in joining that, you can join over 500 members now. All you need to do is go to a free channel and contact me through there. Let's go ahead and get into the Bitcoin update. And of course, we're not really in much of a different spot as we were when we did our last update, which was yesterday. We're pretty much still in that same area. The only difference really is we're forming what we have seen, two things. We're forming a horizontal resistance range. This is kind of sitting between 21,200 and just under 21,300. It's kind of sitting around 21,260. And you can see this on our double red lines over here. It's acting as a pretty major resistance zone for Bitcoin right now, for the short term at least. And for us to kind of get this move upwards and get a little bit more relief, we'll need to clear that zone, retest as support. We'll come back and talk about that though in a second. So let's get back to our macro. So this is still what we're looking at for Bitcoin on the macro. We're still in basically exactly the same formation, the exact same pattern as before. What has happened, however, we've had this significant drop down from this major trigger zone, this major resistance point, which was just December 2020. It was about a week period where we found a lot of resistance in there before we triggered that move up. And what's happened now is we've come back down, we've pushed through, we've retested it, we've got rejected, and we're pushing back down. Excuse me. The question is now, are we going to make a lower low and lose this bottom? Or are we going to make a higher low, retest that trend line, and continue upwards and form some sort of W-shaped recovery? And obviously that's the end of the bear market. We'll break through a bear market resistance and continue. This is kind of what everyone in the crypto space, at least right now, is really like debating. Everyone's stuck on it. And I think there's only one logical answer to this. And I think there's a few different ways you can look at it. And we'll go through a few different ways today because, again, the market is heavily influenced by the economy right now. The economy is weak. There's this overarching fear or overarching downward pressure we've got on risk assets and assets in general. So let's talk about it from a chart standpoint of view. From the chart standpoint of view, from a technical standpoint of view, the bottom is technically in. Now, I can bring up a variety of indicators such as the pi cycle bottom. Okay, this is marked the bottom on the last two occasions successfully. It's marked the top basically in every cycle successfully, and it's also marked the bottom this time exactly where we predicted the bottom. Now, will this be incorrect? Will it be invalidated? Again, the only way this is invalidated, guys, is if we lose that bottom. So the bottom is technically in, according to technicals and according to chart. The bottom is technically in until we lose that trend line. Okay, until we lose this level, until we lose this uptrending trend line. Now, that doesn't mean you should be aggressively buying right now, because right now we just had a massive rejection from a major trigger zone, a major resistance zone. So right now, there's a lot of fear in the market. It's not a very safe spot to be buying. The next good accumulation zone will be if Bitcoin reclaims $28,000, pushes through. That will be the next zone to buy. Until then, you're waiting, you're being patient, just in case we do actually lose this level and drop down, because that is a real threat. Now, I did actually see in the comment section, my last video, it was the ribbons or something. I just want to go ahead and take a look at this. The hash ribbons. Apparently the hash ribbons printed a buy signal. Here we go. So look, I'm not personally a massive fan of the hash ribbons, and the reason why is because, like most indicators, they are quite lagging. Not the best bottom indicators. If you remember back to $27,000, when Bitcoin was at $27,000, up around over here, the hash ribbons actually printed a buy signal there, and we continued downwards. A lot of people may have forgot that, but we actually printed a buy signal there. It was around about this point over here. At this point here, on the 25th of June, or maybe a little bit sooner, we printed a buy signal, if I remember correctly, and we actually ended up continuing downwards. So that's something to keep in mind. It's not always going to be accurate. It's quite lagging. We do have to take it with a grain of salt. But with saying that, that is another macro indicator that's been relatively accurate. I'm talking, it's had about I think if I go back in my head, it's about out of the 11, well now 12 times it's predicted a buy. I think about like 9 out of those 12 times, so 9 of the 11 times, it's actually ended up going to uptrend. So it's been statistically more favorable in the uptrend, or more accurate, should I say, than it has been inaccurate. So that's another thing we have to keep in mind, guys. That's another indicator flashing on the macro. And of course, guys, I'm not trying to be overly bullish. I'm not bullish. I'm not bearish. I don't really care where the price goes. I'm just here to tell you guys what I'm seeing. So that's about it for that macro update for Bitcoin, talking about the charts, the technicals. Support, if support into is lost. When support is lost, we'll be very aggressively shorting, very aggressively aiming downwards, and we've already talked about where we think that will go. If we do see that price drop, our immediate target is going to be this $12,000 to $13,000 level. I'm going to mark it out on the chart. If we do lose, here it is. If we do lose this level over here, this red line, we do expect that next move down to be here, and we expect some sort of bottom around there, okay? That is the next move down if we lose that level. Now, what will facilitate a move down? Well, we got a few things. Number one, first, technically, we need to break out of this diagonal. So we need to break this diagonal. We'll go to the short term as well. We need to break the macro diagonal. We need to lose our current low. And if we zoom out to the daily, we would need to lose this major support zone that we've created around 17,500 to 19,000, as well as break downwards and through this horizontal, or should I say diagonal, dotted support zone, which is sitting between 21,000 and 19,000 right now. So we've got overlaid support right now below us that we would actually need to lose to get that to occur. And for that to occur, well, we need some significant selling pressure. So whether it be a trigger event, whether it be a black swan event, or some other event that could drive that price or hammer that price downwards, losing diagonals are a good reason. If we lose a long-term diagonal, we can see a move down, but I don't believe that move down will take us any lower than somewhere around over here. I think that could be the bottom, a retest at least of that 9-year trend line, an uptrending trend line. Like I've been saying for the last few months, or last few weeks, sorry, we do expect a retest of that 9-year trend line at some point. We do not expect the price to just go like this. That was never anticipated, never expected. It would have been great. Don't get me wrong, it would have been excellent, it would have been awesome, but we always did expect a move down to retest that and push upwards. And we're seeing something of that now. The question is, will it play out? So let's talk about the macro, because obviously the economy is one of those main reasons. Anyone who's saying the price is going to go lower, everyone who's, I would say, ignoring the fact that we are a major support or whatnot, they're more or less putting more weight on the fact that they believe the economy could drop low. I'm just trying to find, nope, it's on the other chart. Let's go to the DXY. And the economic situation, obviously, guys, it's here and there. It's here and there, right? Obviously, it's getting worse. Obviously, a lot of indicators in the market, especially in the global economy, looking pretty awful, to be honest. Then we got the financial markets, we've got the interest rates. So everything's kind of convoluted a little bit. There's a lot going on, and it's kind of hard to wrap your head around. But I like to keep it nice and simple and just talk about a few basic principles first before we dive into it. So the basic principle number one is money flows from cash into assets. Okay, so if you're new to the channel, we're just going to explain it nice and quickly. Money flows from cash into assets, really simple. The DXY rises, we generally see money flowing into cash. And the money comes from the assets. It comes from the risk assets. So when DXY goes up, assets like Bitcoin, cryptocurrencies, stocks, they pull back. And a lot of you now, if you've been in the market for a bit now, over the last few months, you would have noticed this correlation. A lot of people are saying, oh, DXY's up, Bitcoin's down, right? And we're seeing that, play out even more so now when we've had these significant, changes in the systematic risk in the economy. We'll come and talk about it in a second. But DXY up, cryptocurrency down. That's generally what we're seeing in general. And if we go ahead and take a look at our 14-day chart, and I actually want to talk about a few things here. First and foremost, I want to talk about this because let's just go ahead and maybe I'll clean this up a little bit as we go. I'm going to explain it as we go. So essentially, guys, to understand, how the economy is affecting the Bitcoin price, and thus understand how it can, positively affect it. Because we talked a lot about how, in the past, how, all this stuff, interest rates rising, inflation is going to negatively affect cryptocurrency and how we're going to see, risk assets prices fall. We've been telling you guys this for many months, since last year. We already warned you guys, bear markets in, bear markets coming. We're going down to, $20,000, whatever. And we talked about all of this, and we used this to explain to you guys, not only give you guys the technicals, not only give you guys the updates on the market, but gave you some real evidence or understanding about how the economy actually drives money, how money flows in and out of assets, how it moves around and why it moves around. So let's talk about this now, because we've developed a little bit in the story. We've progressed a little bit in the story since we talked about it. And up until, I would say, September, because September coming up now, we're expecting a 0.5% basis point hike. And I want to come back and talk about that in a second, because this is a really interesting point. A 0.5% basis point hike is still an increase in the total interest rate, okay? But it's an additional 0.5% on the current interest rate, okay? But it is also a decrease, okay, compared to the last time, which was 0.75, okay, which can be perceived in the economy or perceived by investors as more bullish, as the only reason why they would decrease interest rates is if they expect inflation to decrease. So this is a common trend I want to talk about now before we get started. If inflation increases up over here, interest rates increase, okay? If inflation decreases, interest rates decrease. So we see that correlation. Now, as these change, they have delayed impacts on two things. They have an immediate impact on interest repayments on loans or whatever, but they have delayed impacts on how companies balance their assets, how they manage their cash flows and future cash flows earnings, and how retail also manages their assets and cash flows. As for those entities to have to adjust their positions, they need to feel the effects of that change, okay? They need to feel the effects of that change or the stresses of that change for them to realize they need to adjust their position, and usually they adjust their position after the fact, not before the fact. The reason we got the top, we predicted it was before the fact. They do it after the fact, okay? So what we've seen, interest rates have gone up, interest on debt has rise, companies have sold off assets, okay? This is to keep their balance sheets healthier, increase their future cash flow earnings, to make their companies look more favorable, look healthier, not look like they're dying, okay? Alternatively, their debt to service ratios are decreasing, all right? That is because their interest repayments on their debt, because they've accumulated a lot of assets with debt, okay? On the low interest, when the interest rates were low, now they've gone up, a lot more debt, okay? A lot of interest on debt, their repayments increase, they need to bring those repayments down, they sell their assets to do so. Same with retail. The only difference is retail has faced a different problem. Retail is an entity, they purchase cost of goods. So we have goods and services, food, oil, we purchase those things. Those things start increasing in price because of interest rates, because of inflation. We see, available household cash flow decrease. What happens when that happens? Well, then our debt to service ratios decrease. Okay, if you've got a mortgage, if you've got loans, you have to pay more money back, you have less money coming in, you're spending more money. What are you going to do? Two things. You're going to sell your assets, or you're going to reduce your expenditure on assets, okay? So less purchasing, more selling. And this whole narrative, less purchasing, more selling, has been the overarching narrative of the market for the last 8 months, essentially. And it progressively got worse as time and time has gone. But there's going to be a point where perceived benefit or perceived risk is going to flip. And it's going to flip before it actually does flip. And that's really important, because just as it flipped negative before anyone reacted, it's going to flip positive before people react and see it. And this is what I'm trying to do on this channel here. I'm trying to just analyze everything, trying to get one step ahead of the ball, because we want to stay one step ahead of the ball. We don't have to be correct. We don't always have to be correct, but as long as we've got a plan on both scenarios, we can capitalize on whatever occurs. So one step ahead of the ball. What happens here, guys? We're going to talk about it. So let's talk about this. 0.75, okay, to 0.5 if we go down. How is that going to impact the market? Let's talk about it. So to do that, we need to go back to this chart. And this is, well, sorry, first and foremost, guys, I was going to do a short-term update. It's going to a massive thing, but anyway, this is systematic risk. Okay, so systematic risk drives asset prices, okay? When there's higher risk, people are less likely to invest. As simple as that, okay? So systematic risk measures the risk in the market that you don't have control over as an investor. This measures risk such as inflation, interest rates, monetary policies, tax policies, all those kind of things that you don't have actual impact. You can't alter, you can't change. Systematic risk defines that entire scope of our umbrella term for all of those aspects of risk. Now, interest rates rising, we see systematic risk increase. A systematic risk increase, the return on your investment in comparison to your risk decreases. So if you're taking more risk to get the same return, you're less likely to invest, you're more likely to sell. This is what the overarching narrative has been. This is why money has flowed out of assets and into cash, and hence why the DXY has risen. So there's that linkage we were talking about between before. That's why the DXY has risen. That's our linkage, and that's how we've linked it to risk, okay? So now we've got two things, and this is where it gets complicated, because you need to front run the market in a sense when it comes to predicting the bottom, because the bottom is never obvious, the bottom is never exact. There is nothing ever telling you that the bottom is a bottom in regards to the economy and economic data, okay? Markets usually front run everything, all right? They are fast moving, they'll predict the tops, they'll move down before the top's in or the session's in, and they'll move up before the bottom's in for the economy. That's just how it is, okay? They front run, they're very speculative, and they're mostly driven off perception of risk, not actual risk. And this is what I want to talk about, because we have actual risk increasing. Even in September, if we have a 0.5% increase, that is additional to our previous increases. Therefore, our actual risk has increased. But we do have to keep in mind, investors see it as this. If we've gone up only 0.5%, which is less than last period, therefore they must believe inflation is nearing the top. And that is all it takes for it to flip the narrative and the market to start recovering and continue upwards. As long as people believe that inflation is nearing the top and the economy is going to soon reverse, the return on your investment, the risk and reward balance, the systematic risk changes, the perceived risk decreases, the return and risk balance shift, okay? And that is why we saw this move upwards, and this is why we saw this whole move upwards, guys. If we go back to the chart, you know, after, what was it? What am I editing everything over here? This entire move upwards we've seen over here was mainly because of that whole thing. A lot of people missed that bottom part, that 18K bounce, because they didn't understand how that works. They didn't understand that concept. They didn't understand. They're waiting for the market to say, oh, here's the bottom. They're waiting for people to say, oh, inflation's topped out. They're waiting for that. If you wait for that, you'll never get the exact bottom, okay? Hope that's been helpful, guys. I think I actually might leave the video there. I don't think we have much to talk about. Kind of covered all of it. Hope you enjoyed the video, guys. Hope it was beneficial. If you've got any questions, leave them down below. Of course, follow us on Twitter, Telegram, down link. And if you're interested in supporting the channel, just sign up to Bitget, guys. Trade on Bitget, where I trade. Probably the best exchange I've ever traded on. I trade on a daily basis. Got a few trades going at the moment. And with that being said, guys, I'll catch you in tomorrow's video. Thanks for tuning in. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you're a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.